Well, g'day. Welcome back. We're on for another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson. I'm the Australian Meats and Livestock Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian livestock industry to help the sector manage market and price volatility with our Australian feeder cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives, such as futures, options, and over-the-counter products or swaps, may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Well, yesterday, StoneX released the H1 2026 Australian Cattle and Beef Market Outlook Report. That's what today's episode is going to be on. We're going to get into all the key forecasts from that report, my views on supply, prices, the challenges and opportunities I see for the beef industry this year, and what does it mean for you as a producer or someone involved in the beef supply chain. There's probably three key themes or takeaways which I really want to highlight that came out of the report. First one is definitely the cattle cycle reaching its cyclical highs or peak in 2026. So we had the lows in 22, which coincided with obviously the depths of the rebuild, but we've now seen the 4 years following that strong herd growth, big pickup in production or slaughter production numbers, which has flowed through to exports. We're going to see that peak this year. And then in 2027 onwards, we'll be in the other side into the new cycle. The second one, which I talk about a fair bit today, is the capacity of processors to handle this high supply. It's going to become a real topical issue, I believe, in 2026. And I think it's got the ability to really define and shape how the market and prices in 2026 perform. Thirdly and finally, geopolitics, tariffs, trade relationships, global supply competition from Brazil, protective governments. I think it's just generally these global macro headwinds are a challenge for the sector this year. And when you couple that locally with drought encroaching on the broader broader cattle areas of Eastern Australia, I think there's a few challenges that we've got ahead of us. And it's something that we really need to be aware of and cognizant of, because in its own unique ways, these factors all combine to impact how markets and prices perform locally, how volatile the market can become. And I just feel that the way this year's sort of set up, there's these multiple factors that we need to be cognizant of. On the figures side, there's probably three top line figures which I think really paint the picture of where we're at. On the herd size, I've got it, or we're forecasting it to decline to 40.5 million in 2026. That's down to 2024 levels. But when you look at it over the longer term, very, very strong in terms of its size. So I do think we're going to go into liquidation through central and northern New South Wales this year, southern Queensland as well. That's going to weigh on a reduction in numbers, and we'll see high cows turned out of that system, which will add to this liquidation. Slaughter volumes to reach 50-year highs, or I think the best way to put it is the third highest level on record at 9.4 million head. So if that figure were to be realised, it would be only be behind 1977 and 1978, where we killed over 10 million head of cattle. So you could say in the modern era, we are forecasting record highs. In modern era of cattle processing, we're forecasting record highs. Following on from that, beef production and exports again to be at or near record levels, 2.86 million metric tonnes of production, and beef exports at 1.54 million metric tonnes. So very, very strong performance or forecast for performance. Carcass weights really going to drive that, and we'll see that flow through obviously into high production and exports as a result. Into a little bit of the detail now across those key production metrics. On the herd, as I've mentioned, overall easing down about 1.5% to 40.5 million head. The liquidation in central northern New South Wales, southern Queensland, I think will surprise a few people, but that's really going to be the driver of that reduction in numbers. The other aspect to why I think we'll see the herd decline, the southern herd's rebuild isn't actually going to start until spring joining of 2026. So there's no upward pressure on there on increase in supply. And obviously there's more cattle throughout those regions above that I mentioned, which are becoming drought affected. In the north, though, I do believe we'll see continued growth in that herd. When you couple 5 to 6 average to well above average wet seasons and the large number of breeders the north has at the minute, I think we're going to see that herd continue to rise. But conversely, it's going to be offset basically by the liquidation we see through central eastern Australia. What I want to wrap up with on the herd, though, is last year there was a lot written about how high the female slaughter rate was, and the fact that because it was so much above 47%, the herd was apparently in significant levels of liquidation. MLA's Beef Producer Intentions Survey released in November of 2025 actually told us that the herd grew by about 1.5% to 41.14 million head for the year, calendar year 25, and breeding female numbers were actually unchanged on 2024 levels at 14.7 million head. I think what that tells you is it's important to remember moving forwards that using the female slaughter rate as an indicator of the direction of the cattle herd, and be that liquidating or rebuilding, it's not accurate. So as we get into 2026, particularly as the cycle starts to change and we move down the other side after it's peaked, my suggestion would be to ignore that FSR and look at the raw underlying data. Getting into slaughter at 9.4 million, if that were to be reached, that would be the third highest volume on record, only behind 1977 and 78, which I mentioned earlier. Both of those years, we processed over 10 million head of cattle. So whichever way you want to look at it, we're pretty much nearing, or we've got the potential, 25 certainly did it, in the modern era of beef processing in Australia, where we're at records. I think a lot of it does depend, though, on how far or how much more we can get out of the system on processors' ability to expand their kill space by adding additional shifts. I think that's the big one there. And if they can do it, or they're able to, we'll see that press on. Cattle supply is not going to be the issue this year. The other aspect to consider about this processing capacity situation is throughout 2025 in Australia's cattle regions north of Dubbo, producers weren't forced sellers. They sold because the market was good and they were able to. Seasonal conditions weren't forcing them to sell. Whereas I see this year, there is going to be some forced selling because of below average seasonal conditions forcing turn-off. And when you see that producers make early decisions, like I mentioned earlier, to sell down their numbers, I think that rush of supply can push up against processors' capacity, and that's where I see risk for the sector. Grain-fed turn-off, again, forecasting it to reach records, 3.6 million head of cattle turned out of feedlots. The forecast for this year, which would exceed the estimate I've got for 3.55 million in 2025. There's two factors to that continued growth. The first one is obviously the relentless expansion of feedlots, building new pen space and getting more cattle in yards. The second aspect, I think, which is important, is this reduction in days on feed. So with the China situation, basically really reducing the numbers of cattle we're going to see in, mid to long-fed Angus programs or long-fed programs in general, a lot of those cattle are going to receive an implant or hormone growth promotant, and they're going to be cycled into shorter fed feeding programs. So they end up in markets similar to the rest of the stock. or rest of the feed of grain-fed cattle production. What that's going to do is obviously increase the turnover because the cattle are finishing faster and there's going to be more of them. So that's another thing that's sort of adding to this additional upside on basically grain-fed cattle supply, and that'll translate to high grain-fed beef production and ultimately high grain-fed exports this year. Production and carcass weights. I think what's really interesting is we're increasingly seeing this high influence of grain-fed cattle production is offsetting these seasonal conditions and the challenges that they sort of bring towards lower grass-fed carcass weights. And I think we're going to see that continue again in 2026. So the proportion of grain-fed cattle as a share of the total being processed is growing. Grain-fed cattle are heavier. That's offsetting lower grass-fed kill weights. And I think we're going to see more of that. On the production front, when you combine 50-year highs in slaughter numbers and really strong carcass weights, that is going to push production again to either surpass the 25 record or at least get very close to it. On the export front, volumes at 1.54 million is in line with 2025's record. It does have the potential to go higher. Certainly at a production level, we're going to produce the available beef to do so, particularly if slaughter can lift and processors can manage the high supply. But I think it's important to point out that there are some headwinds which could weigh on exports. The first one is the influence of Brazil supply in the market, particularly likely in the second half of the year after Brazil fills its 1.1 million metric ton quota with China. That's likely to fall in around July, August. So for the last 5 to 6 months, roughly, of 2026, we could be in for serious competition in major markets like the US from Brazil. That has the ability to dampen demand for Australian beef, particularly on the manufacturing end, which can then obviously affect our overall export volumes potentially as well. The China's tariff situation does muddy the waters a bit. It's likely that it is going to impact the prices received by exporters on a kilo rate out of Asia generally because of the volume of product they take from us, particularly on the grain-fed side. They're our largest grain-fed beef exporting nation in 2025. So there's a few challenges there. Other things like geopolitical risk, nations wanting to protect the cost of living or shield their citizens from cost of living. Indonesia is a good example at the minute through Ramadan and Eid. We're putting caps on beef prices that can be charged to buyers, things like that. So there's a lot of challenges here that are weighing a little bit on the export outlook, and it is something to be aware of, but ultimately we're going to produce enough product for those volumes to be shipped overseas. In the live export space, I really think this year we're going to see the fruits of the rebuild for the northern cattle herd sort of come home to roost. It's had 6 years now really of average to, well above average seasonal conditions. There's going to be a lot of, feeder cattle and a lot of live export cattle available in the market in 2026. I've got the forecast unchanged on last year's H2 outlook report at 850,000 head. I do think that that's very much achievable and there's potentially upside in it. One thing that I do think is really going to support that is this announcement from the Indonesian government that they've lowered quotas or import permits for box beef for private companies in Indonesia in 2026. We know the Indonesian consumer really enjoys beef, and I think if the private entities can't import as much as the market demands, the marketplace is going to look somewhere else. And I do believe Australia is really well positioned. Its live export sector, cattle export sector, to capitalise on that opportunity. I read that as bullish, and I think that's quite positive as a demand signal for the industry this year. But there are headwinds for it as well. The first one's just that non-existent demand from the once dominant Vietnamese market. We're just not seeing it anymore. I do think that's an issue because ultimately what it means is this significant market concentration of Indonesia. Last year, Indo accounted for 73% of our total live exports. So that was the highest market share figure since 2009. And I think, in the last 5 to 6 to 7 years, both for Australia and other countries with geopolitics, we can see the risks of being overexposed or concentrated on one market. I've mentioned it a little bit already, but the other factor that I see as a headwind for the export space is that Indonesian government wanting to keep costs low. And if that extended beyond Eid and Ramadan, that would be a bearish signal. But ultimately, I'm quite optimistic for the live export space. I really think it's going to come into its own this year. There's big volumes of cattle to be moved. The supply is healthy. Demand is generally pretty good across the board. I think it's in quite a positive space. Moving beyond the sort of key production metrics and indicators and figures we talk of, I'll get into supply and prices. Starting with supply, it's going to be really, really solid this year. There's going to be a lot of cattle that'll be moved. In places, I think it'll be higher than 2025, particularly with this influence of drought and a lack of water through, major regions of central, northern New South Wales and Queensland. I think that is going to have a big impact. The second aspect on supply, we're going to see a lot of older cows that have been kept for the last 4 and 5 years that have been performing turned out. They're always the first to go when you see poor seasonal conditions eventuate, and I think that we're going to see a lot of cows moved this year. Southern Australia, generally, it's going to get very tight in winter for feeder cattle and slaughter stock again in 26, particularly with the long range forecasts indicating a return to average seasonal conditions for those winter dominant rainfall areas. What I expect that to do is, much like last year, force those southern buyers, both processors and feeders, well into northern Australia again for large parts of this year to chase and secure supply, because there'll be a lack of numbers themselves in the southern markets. On a seasonal basis, you generally see May as a very big month for cattle supply. I think we're going to see the same thing again this year. The month of May is generally the first half of the year's seasonal peak in volumes, yarding, slaughter, etc. I think that is likely to be the case, but we could see that sort of extended in the sense of, April, we could see more numbers than usual, despite the fact that it's a bit of a bumpy month with public holidays, but mainly because of this dry weather. You could see decisions made early, particularly if oats crops can't be planted and there's a lack of confidence for, obviously, a winter graze on cattle. You could see cattle moved earlier, and that period sort of extended or it lasts a little longer. On the prices front, fundamentally, the outlook for the beef industry and supply and demand and where the situation is at a global macro level is very positive. It ensures Australia's placed in a really solid position, and I think fundamentally that's supportive of prices. What sort of, to me, when I've been preparing this report and thinking about all these different factors that contribute to it, to me, there's more of a muddier outlook this year than even what there was in 2025. China tariffs, geopolitics, Trump administration's backflips on decisions with trade, competition from Brazil, and that's even without talking about the domestic challenge of seasonal conditions and high supply. I think generally the market is well positioned at a fundamentals level, but we know fundamentals don't always dictate how things perform. It is, I think, the first 6 months of this year is going to be a really good reminder of how much Australia's market and price performance for cattle is driven by the weather, and ultimately how that dictates supply and demand and confidence in the marketplace. In the short term, Feb March, without any decent widespread rainfall, cattle prices do stand to soften into next month. Without something to pull up supply and a lack of sentiment or confidence in the sector, cattle prices do stand to come under a bit of pressure. But I think into winter, we could see improvements generally across the board, particularly in the slaughter and feeder space, because of those southern buyers chasing stock in the northern half of the market. And I think that will prove to be supportive. But I think cattle prices at or around 5-year averages through to the 30th of June would be a reasonable outlook to have. There's a couple of opportunities and challenges which I identify in the report, and I'm not covering all of them, but I felt I'd cover a couple which I believe are the most important. On the opportunities front, this is the one that excites me the most, and it's one I'm really interested to keep an eye on, and that's the United States beginning to buy larger volumes of Australian grain-fed beef in the second half of 2026. My thinking behind why this has legs and it's got the opportunity to be really powerful is to do with the lack of cattle going into feedlots. For the US, numbers were down about 9% year on year for the United States from its latest report. What that's ultimately going to do, because of we're now seeing lower supply going into feedlots, means despite the fact that carcass weights are at record highs in the States, beef production is going to suffer, grain-fed beef production. So when we get to the second half of the year, when the crunch comes, when lower numbers are being pushed out of feedlots to be processed, I see demand from US customers starting to look towards Australia to get us to fill that shortfall gap. When the US consumer and the market itself generally is looking for a grain-fed product, Australia's best placed to substitute the US on a like-for-like basis. I think it's a really exciting space to watch, and I'm really interested to see how this situation plays out. I think we're going to see another record year of grain-fed exports into the US, and it really start to pick up volumes as that grain-fed supply crunch comes. On the challenges side, I've mentioned it a fair bit already. It's this processor capacity piece. Last year, producers weren't forced sellers and processors were operating at capacity, or the main states of New South Wales, Victoria and Queensland. With drought now coming into the broader east, particularly some major cattle regions, supply pushing up against processors is a serious risk to the market and the broader stability in the market. Why I say that is I think we're going to see, or if it was to eventuate where processors can't handle the numbers, cattle may be booked up, back to levels 2 to 3 months out, like they were in 2017 to 19's drought, and processors use price as a lever to deter producers from selling. And that situation creates instability of the market, and it's just generally a risk. That's something that I think we're going to be challenged by. If processors are able to add additional shifts, manage labour, resourcing, etc., that risk will subside quite quickly. But to me, just with the way the outlook is at the minute, and I've mentioned it last year, it is something I'm worried about. The second one is Brazil. I think when Brazil fills that quota of 1.1 million tonnes into China, likely that it's going to be by mid-year, July, August, I think we're really going to be challenged in some of our key export markets in the second half of this year. And obviously, of course, the first one that comes to mind is the US. Brazil can move larger volumes of product at a comparatively lower price than Australia. It's done that already in the early parts of this year. And I think for us to remain competitive in export markets, we've got to match that. And what that ultimately means then, once it flows through the supply chain, is weaker pricing for your sort of manufacturing end stock like heavy steers and processor cows. The Brazil situation globally, while we export and produce a lot of beef, is one to really be mindful of, particularly because of that China arrangement. It would be less so if Brazil had better access into China, but a bit like us, it doesn't. And that dynamic with, potentially 500,000 to 600,000 tonnes extra beef it's got to move somewhere, we need to be mindful of that. What does this all mean for you as a participant in the beef supply chain? The first thing I want to highlight is we're reaching cyclical highs in the production cycle, which means availability of cattle, supply of cattle, movement of stock generally is going to be very strong. There's going to be a lot of cattle around. Understanding things like this Brazilian dynamic or the China tariffs redirecting feedlot preferences for shorter fed cattle or a lack of demand for HGP free, same sort of thing. You might not think these global situations are, important here now, but structurally they are making changes to the way buyers, feedlots and processors and exporters structurally and fundamentally do their business. Understanding that and how the impacts of, say, additional Brazilian competition in the US market could force processor cow and heavy steer prices lower in the back end of this year is important to understand for decision making. I honestly believe that the fundamentals are good for the beef industry. I think we are in a really healthy position, but I'm also aware that there are headwinds, and we don't need to stick our head in the sand in years like this when we're coming into dry conditions and there's a few things coming at us. I honestly don't believe prices are going to reach the highs others suggest they will. I just feel like there's too much weighing against the market in 2026 for that to happen. The ducks aren't in a row, if that's what you want to call it. I think the other thing to think about at a supply chain level is this volatility that we're seeing is certainly going to be here a lot this year, particularly as the marketplace becomes more sensitive to weather forecasts. You get drier and drier and drier, you get more desperate, a forecast comes, you get excited. That, up and down nature of emotion and confidence will add to volatility. And then you throw in on top of that all the geopolitics globally and these factors way outside of Australia's control, which can turn on a dime and announcements can change overnight like we saw last year. Volatility is going to remain. Generally, I'm optimistic for the sector, but I think we're going into a period where we're reaching cyclical highs and things are changing, but it is an exciting time to be involved in the industry, and I'm looking forwards to seeing how it all plays out. That's all for today, but importantly, pencil into your calendars Friday the 13th of March. I'm going to get to chat with Ryan Turner from our Kansas City office. Ryan's the US Meats and Livestock Director for StoneX. If you haven't already, jump on to the episodes I had with Ryan, 2 of them last year. Really looking forwards to getting him back on. We'll be doing that episode live in Kansas City, so I'm looking forwards to that one face-to-face with Ryan. There was a fair bit to get through today, so I can imagine if you do have questions on some of my forecasts or my views of why things happen or just want to have a chat about it, send an email to me to ripley.atkinson@stonex.com or record a voice note of yourself, where you're from, the question, and I'll get to answering it in the next episode. Feel free to share this. This one's obviously a fair bit of detail in it, and it's a forward-looking episode. Feel free to share it with your mates and anyone else you believe could be interested in it. If you're enjoying it or enjoying what we're sharing with you, give us a follow. We appreciate the support. But thanks for listening. Take care. And until next time, we'll see you then. Cheers.